It's interesting to note is that Appchains, at least in the broadest sense of sort of like an app-specific execution environment, are winning. Like in the first cycle, there was sort of Ronin and Flow and Stepin. In this cycle, there was DoIDX, Hyperliquid. It's clear that there's product market fit for large projects doing like app-specific environments. Most of them are going for L2s nowadays rather than L1s, and I think that makes a lot of sense, which is also why Initia's design makes so much sense.
Allowing teams to build entire Cosmos SDK chains in whatever VM they want as rollups on Initia and have instant access to basically everything they need, from explorers, liquidity, integrations, rewards, kind of all the participants of a world that's so fragmented in terms of L2s that care about themselves and their growth, users on the L1, stakers. Like, how do we align all these people? And we've basically built a very robust economic framework that lets us do that, which is called Initia VIP.
Welcome to Epicenter, the show which talks about the technologies, projects, and people driving decentralization and the blockchain revolution. I'm Brian Crane, and today I'm speaking with Ezaan, who's the co-founder of Initia. And we are joined today by two very special guest hosts. So Jose Macedo, who's the co-founder of Delphi, and he runs Delphi Labs part. And then Anil, who is the CEO and founder of Delphi. So Initia is a layer one blockchain that's designed around deploying customized, interconnected, or interwoven, as they call it, rollups. They've just launched, so really excited to dive into Initia today. So just before we get started, we'd like to share a few words from our sponsors this week.
If you're looking to stake your crypto with confidence, look no further than Chorus One. More than 150,000 delegators, including institutions like BitGo, Terra Capital, and Ledger, trust Chorus One with their assets. They support over 50 blockchains and are leaders in governance on networks like Cosmos, ensuring your stake is responsibly managed. Thanks to their advanced MEV research, you can also enjoy the highest staking rewards. You can stake directly from your preferred wallet, set up a white label node, restake your assets on EigenLayer or Symbiotic, or use their SDK for multi-chain staking in your app. Learn more at chorus.one and start staking today.
This episode is proudly brought to you by Gnosis, a collective dedicated to advancing a decentralized future. Gnosis leads innovation with Circles, Gnosis Pay, and Metri, reshaping open banking and money. With Hashi and Gnosis VPN, they're building a more resilient, privacy-focused internet. If you're looking for an L1 to launch your project, Gnosis Chain offers the same development environment as Ethereum with lower transaction fees. It's supported by over 200,000 validators, making Gnosis Chain a reliable and credibly neutral foundation for your applications. Gnosis DAO drives Gnosis governance, where every voice matters. Join the Gnosis community in the Gnosis DAO forum today. Deploy on the EVM-compatible Gnosis chain or secure the network with just one GNO and affordable hardware. Start your decentralization journey today at gnosis.io.
Cool. Well, thanks so much for coming on, guys. This is going to be fun. And it's kind of a different format than we usually do, but I think it will be a good one. So maybe we can just do some introduction. Let's just go around. Maybe Ezaan, do you want to start?
Sure. Howdy, fellas. I'm Ezaan. As Brian initially said, I'm one of the co-founders of Initia. We just launched. It was pretty awesome. I think we launched the Initia L1 plus around 10 layer 2s, all on different VMs, all at the same time. It might be the largest orchestrated multi-chain launch ever, probably. I don't think people usually launch multiple chains at the same time. So this is probably the only one that happened, but also, I guess, the largest. I'm sure we'll dive further into it, but pass it over to Anil.
Yeah, so I'm one of the co-founders of Delphi. We've been early supporters of Ezaan and the Initia team for a while now. So I was super excited about this launch, and excited to be here to talk about Initia. I'm sure Jose and I will talk about our whole Appchain thesis, the failure with it, and then how we kind of ended up, diving down an Initia rabbit hole.
Yeah, I'm Jose. I split my time between Delphi Labs and Delphi Ventures. Adventures actually led this initial investment and known Zon for a few years now. And yeah, hoping Zon can make Appchains finally work and avenge. I think all of us on this call have been bullish Cosmos, which isn't ideal, hasn't been ideal. So hoping Zon can run it back and make Appchains finally work.
Inshallah, brother.
Yeah. Maybe Zon, so you were building on Terra before. I'm curious, what was your experience building on Terra, and how did that led to you starting Initia?
Yeah, so I wasn't just building on Terra. Before that, I worked at Terra as a smart contract dev. It was like my first time getting into smart contracting and building in crypto. Before that, I was just a regular software engineer. I played a lot with Ethereum, but never actually built contracts there. And so Cosmosm and Terra were my first time, actually doing that. And it was a lot of fun. I thought it was really interesting. Cosmos was cool. I got to learn Rust for the first time. All these new principles when it comes to building smart contracts. And the craziest one is just that stuff doesn't execute automatically. Right? Like something has to poke a smart contract to move. And that was just like a crazy paradigm shift in my mind. And as opposed to building in Web 2. And so that was a lot of fun. I got to build some really cool applications. And then I left Terraform to build my own project with my current co-founder, Stan. And it was an options project that was basically hooked into Anchor, along with, we had a lot of the ecosystem teams ready with integrations. And it's really exciting because Terra as a chain was like one of the most vibrant ecosystems out of any blockchain that existed at the time. Obviously, a lot of it was fueled by Anchor, which we know was super unsustainable, but it was like this crazy run that was happening in Cosmos. And Terra really was all of Cosmos. And I think it was somewhat propping up the Appchain thesis to a big extent, because we're like, hey, look, this one Appchain really succeeded, but none of the others really also succeeded in their own merits. And so once Terra collapsed, I think that with it, a lot of the app chains and Cosmos just crumbled. And obviously the project that I was building there didn't make any sense anymore. And so we scrapped that, returned money back to our investors who funded us back then. And then basically a few months later, we're thinking about what to build next, because me and Stan still wanted to do something. And we started basically thinking about Initia and rebuilding the Appchain thesis with a much heavier guiding hand, one where you shape its creation, the first few app chains, and how everything comes to play, rather than leaving it all up to an open source system. Yeah, that was kind of the beginnings of that. And when I was working on Terra is when I first met Jose and Anil. I think at the time they were on the labs team working on Astroport. And that's actually how I met my co-founder, Stan. He was designing, building Uni v3 or concentrated liquidity pools for Astroport, and I was supposed to help build it. So thanks, Jose.
You're welcome.
So yeah, let's talk about the Appchain thesis more generally. I mean, I guess if you sort of zoom out, right, then the thing that everyone competes for the most in crypto, I would say, is like application developers, right? And application developers have a lot of different options today. You could build maybe on ETH mainnet, but fees are high, so that's probably not the preferred choice for most people. But you have things like Solana and Base, that are at the top, right, where you can just build your smart contract on there. Or you could say you build your own L1, right? So that has maybe struggled a bit, but it's still happening quite a lot, right? People still build their own L1, whether it's like, a kind of totally new L1, or whether it's maybe Cosmos chains, or, some other people trying to compete here, maybe like Avalanche and some others trying to go in. Or there's rollups, right? And then rollups, again, there's many options, right? You could deploy on an existing rollup or do your own rollup. And you do your own rollup, you can do it on Ethereum. You could do maybe some sovereign rollup on Celestia, right? Or you could build on Initia, right? Like interwoven rollup. How, maybe for any of you guys, how do you guys see the sort of pros and cons here and the state of the Appchain thesis?
So yeah, I think the trade-offs, and I think one thing that's interesting to note is that Appchains, at least in the broadest sense of sort of like an app specific execution environment, are like winning. We've seen it and across all cycles, right? Like in the first cycle, there was sort of Ronin and Flow and Steppen. In this cycle, there was DYDX, Hyperliquid, Blast, Abstract, Converge now. Like, it's clear that there's product market fit for large projects doing like app specific environments. Most of them are going for L2s nowadays rather than L1s. And I think that makes a lot of sense, which is also why Initia's design makes so much sense. And I think the main reason that people do this is because sovereignty and customizability matter, right? Developers want to control the ground they build on. They want to be able to build fully vertically integrated experiences. They don't want to necessarily compete for block space, face like uncertain costs. They might want to customize parts of their stack. They might even want to be able to like roll back state if they need to, right? Without relying on an L1 having to do that if there's a hack or something like that. So I think there's a lot of reasons for going into an app specific environment. And I think that thesis is winning. The thing that didn't win was like Cosmos, right? Or I guess like Cosmos SDK has done okay, but Cosmos or like Atom as a token and sort of the tokens in that ecosystem haven't really done well. And to me, Cosmos just sort of misunderstood the role of like that a hub needs to provide to app chains, right? And I think part of it is because it was conceived 10 years ago before anyone was even talking about L2s, and most of the design decisions were made optimizing for sovereign chains rather than rollups. But the second thing and most important, I think, is that it's sort of misunderstood what projects want from like their hub, right? From a hub, like the realities of what they want. Like they thought, oh, all they need is like this optional security, but actually that's like not at all the stuff that's most pressing. Like the hardest things about doing an app chains and the biggest trade-offs in launching one versus launching on an existing chain is simple stuff like wallet integrations. Like you have to do your own wallet integrations. You have to do, if you integrate with a centralized exchange, they need to integrate with your chain. It's way harder to get that done. Block explorers, like there's no block explorer. Even some of the like biggest chains today, I mean, Solana block explorer is notoriously crap, right? You don't have canonical bridged assets with liquidity, right? So you won't have stable coins. You're going to have like this alphabet soup of stable coins with different prefixes. And then there's like the intangibles, which is the business development and ecosystem development, which is actually like one of the most important parts, right? If you're a hype project on Solana, you get a lot of benefit from that. Like there's a bunch of people that go farm your airdrop. People are active on like Solana Foundation, tweets you. People will be active on your Discord just because you have that ecosystem behind you of everyone that owns Sol and wants your project to succeed because it's good for Sol. And all of this was missing from Cosmos. Like there was no unified way to bet on Cosmos. Like it never happened, right? And at the same time, every time you launched a new chain, you faced all these issues, and so it was just very costly to build an app chain. And this doesn't even go for the fact of like bootstrapping validators, having to pay out inflation, fragmenting UX. And so Initia just sort of, from my perspective, really reinvented, like rethought from first principles. What do you want from a hub? Assuming we go into this sort of rollup centric, app specific world, what do these rollups actually want from a hub? And then they sort of rebuild it from the ground up, thinking about all these things and like solving kind of all the problems. And I realize I've just rambled for a while, so maybe Zon, you want to come in and say how you guys did that, or?
Sure. Yeah, I think Jose is right. Like there totally are two ways that crypto scales, right? We all know it's either the fast chain or the app chains. And everybody's working on the fast chain camp. I don't know what's actually going to win in the long run, but I can, put my horse in the race for the app chain thesis because it seems like it's the natural evolution, right? It's an application's final destination is what we call Initia, and it's because apps will want to capture their value and potentially make customizations that lead them to winning one specific vertical because they've altered something that lets them edge out competition on that sector. And that's the way we've kind of seen things play out over time. You have perp dexes on every chain, then one actually takes it seriously, builds their own chain, and they just fucking win, right? And this is going to happen along other verticals as well. So I think the Appchain thesis will play out. Now it's about how do we make this very easy? What do teams need? How do we get more of them to build? And I think Initia is just designed in the right way to provide these teams everything they need. But if you look at some of the other options, they're just still so infeasible, right? Like building a Cosmos layer 1, you get the flexibility, but it's still goddamn hard. Building a rollup on Ethereum, very easy, right? You have so many RAS solutions, but you fragment all the infrastructure because these RAS solutions give you like 10 DA options and 15 interrupt solutions and all these oracles, and you need shared standards across a multi-chain world for UX to properly work. And then you have no customizability. Like OP Stack, Arbitrum Orbit, these things are great, but you can't, like, for example, reorder transactions. You can't use a different type of virtual machine. The choices that do matter for developers day in and day out are things that you can't edit, but you get to change the DA layer. Like those are not what's actually interesting. So at Initia, we've kind of combined the best models by using some of the hindsight in history that we've been through as builders in Cosmos, as well as big users on Ethereum, allowing teams to build entire Cosmos SDK chains in whatever VM they want as rollups on Initia and have instant access to basically everything they need, from explorers, liquidity, integrations, rewards, and then ensuring that we have a very tight hand on what the product UX looks like. So what does it actually look and feel like for end users interacting with 15 different rollups? And do we control those touch points so that over time we can get to a world where it feels like one, and the Initia team can envision that and build that ourselves? And then lastly, like, how do we ensure that value is retained, and how do we align kind of all the participants of a world that's so fragmented in terms of, L2s that care about themselves and their growth, users on the L1, stakers? Like, how do we align all these people? And we've basically built a very robust economic framework that lets us do that, which is called Initia VIP. And what that does is it essentially just distributes rewards to users that are using applications. Simple as that. And as a layer 2, to get more rewards, you have to build use cases for the native init token and basically care and have a reason to care about it. And that's either you build a demand sink or integrate the native token on your chain, or you try and influence holders on the layer 1 to vote for you. And so in this way, we kind of make sure that everybody still cares about init. I like to use an example that Initia is like the federal government, and rollups are like states within the US, where everyone has their own sovereignty, but they still care about the ultimate growth of the entire country as a whole. And I think having this federated stance will allow us to build this app chain future correctly at first. And then in the future, we can think about how to properly decentralize the control of everything.
Yeah. I think like one of my favorite, things that you guys have focused on your approach is, the target customer in the immediate near term has been like definitely devs, right? Building, especially with the flexibility that you have, supporting EVM, MoveVM, WASM VM. Devs can, build using Solidity, Move, WebAssembly, right? Like kind of anything. But I think what's really cool about it is I think at the end of the day, the end user is going to also like reap all these benefits, right? And kind of curious, like, would love to kind of get more into, how the launch went. You guys just launched recently. How did it go? I know you guys launched with, like, I guess like 10, Initias, like, curious which ones are you maybe not most excited about, but which ones are you like most surprised about coming to market this fast? And which ones do you think are necessary for like users who are going to start bridging the Initia? Like, how's that experience and what can they do right now or in the near term?
Launch is never as smooth as you think it's going to go. Everything always has some problems, but I would say things went relatively smoothly, at least on the L1 side. I think one of the things we've seen in the past is just when an airdrop happens, chains always break because you have like hundreds of thousands of users just trying to spam transactions within the same like 2 seconds. And so we built a really nice batching system that essentially just batches requests. And then we do one transaction that sends like 100 people their airdrop at one time instead of each of those being its own transaction. And so that really helped make sure that the launch went smooth. And then in terms of layer twos, we did our best to have all 10 and their front ends live before the public launch. But I think it was actually around all 10 chains were live, but maybe only around 5 of them had their front ends up. But over the weeks since launch, all of those have come online now. So we're in a good place, and we have, I think, 5 or 6 more rollups that will go live over the next month. So that's pretty exciting. And there's quite a few things that people have been doing on the chain. The first and foremost is we have this system called enshrined liquidity. We use our inflation to basically build a hub of liquidity on the L1 that's accessible, but you also stake that with validators. And so I think there is like a $15 million init USDC pool on the layer 1 that has a pretty good APY. Obviously, NFA, don't ape into that pool if you don't want to. So that has been pretty awesome to see, just that growing and people actually using the system. And then the first VIP distributions happen within the next 3 days. I think that is one of the most exciting things to have been watching, because there's a gauge vote on the underlying layer 1 where stakers vote which rollups they want to receive rewards through the VIP system, and watching that evolve has been really interesting. So right now you basically have people playing some games behind the scenes with these whale stakers to try and incentivize them to, vote for their rollup to allocate them more rewards. And you kind of see a little bit of dominance moving towards like the DeFi applications for these, because they obviously are trying to sustain larger amounts of TVL. But what's interesting still is that even if you are not a DeFi application and you still get some of the votes here, that is probably hugely advantageous for you and your users, because you're not trying to maintain 20, 40, 50 million TVL in a lending market. You're trying to give a little bit of boost for doing actions in a game. And VIP basically just helps you bootstrap that. I think one of the things about bribing behind the scenes is that it's a little bit sus. If you don't know the right people, it's going to be hard to get the gauge vote up. But that is why I'm excited about platforms like Cabal, which kind of make this transparent. I think you guys are investors in Cabal, but it basically allows anyone to, provide incentives to voters to vote for them inside this gauge vote. And that'll be good once it becomes fully transparent. But the economy has been pretty exciting. I think so one of the ones that I'd point to is Tamagotchi. They're a fully on-chain game, just probably the most cracked game that I've ever seen get built that is all on-chain, and it makes perfect sense for them to be their own roll-up because they capture the value from their sequencer. I think in the past 4 days alone, their sequencer has minted like 15K worth just off of transaction fees. They're like, that's already a very awesome sign, right? There are paths to being profitable as a roll-up because you aren't distributing these fees back to a set of validators. You're just keeping these rewards. And, 15K in 4 days is like probably enough to sustain your runway for a small team of people. And it only increases as your game becomes more exciting or you get more users. So that's pretty cool to see. And then they also held a public sale Their token is backed by Baseline. I think they raised over like 2 or 3 million in that public sale, all on chain. That's pretty awesome for a young, healthy economy. And then a couple of other cool projects that you might want to look at are Echelon and Inertia. They're basically just lending markets, but Echelon has, I think, maybe like 300 mil TVL across Aptos. And now on Initia, they have an early lending market for Init, USDC, Tia, some of these other assets. Yeah, what have you guys been seeing? Have you tried any of these rollups yet?
Not yet. Mainly just liquidity providing on L1.
Thank you.
Honest work.
Yes, sir.
I've seen some of these NFTs going crazy too.
Yeah, the Stargaze team, they deployed a rollup called Intergaze, which is basically just Stargaze, but as a rollup, which is pretty cool because they are definitely one of the last remaining builder teams in Cosmos. And they have just been launching a few collections like Twosies, Raccoons, Anyos. Those have been fun.
Yeah, I mean, regarding the launch, right? Maybe one thing briefly to mention, since we have this group together. I mean, we of course we've been working with Initia for a while, and now worked also with Delphi, right, to launch the first Delphi validator. So maybe Anil, like, what was the thinking for you behind doing a validator for Initia?
Yeah, to be honest, Brian's been annoying me for a while to do, to have Delphi do its first validator on, some chains, right? And to be honest, one thing that we always discussed internally was like we wanted to make sure, we feel like it's kind of like a big responsibility of us, like, tying our brand or kind of like using our brand to kind of like have this vote in confidence. So we honestly didn't really think about it till, we really started getting excited about the initial launch. And, I think we kind of chatted with Brian and said, hey, is this possible? And, didn't even realize how closely you guys were working together. I think it made a lot of sense. I think our team's super excited about that. It's gone like, really well since we first started. It's like a whole different validator business that we've launched. So, maybe we'll do more, but I think for now we're pretty excited to, see how this one goes. And to be honest, I think Delphi as a whole, the way that we kind of have like operated and learned in the space is like, rolling our sleeves up and getting our hands dirty. And I think the validator side of crypto has been some, side of business that, obviously with people like Brian in our network, we've been able to learn a lot from. But I think like actually getting our hands dirty and getting involved helps us just understand it way better. And I think Initia was a chain that we wanted to kind of support and kind of get like as close to as possible.
Yeah, let's talk about the whole economic model, because that feels like one of the most interesting parts. I mean, I think we on a high level, right, like proof of stake chains have basically so far, right, used their native inflation to incentivize people to stake and secure the chain, and that makes sense, right? But of course, if you think of like the success of a chain, people just staking and securing it, like, it's not enough, right? And especially, liquidity is such a crucial thing. And we've seen Chain do something very interesting there with proof of liquidity, which is, we'll see how it works in the long run. But it's definitely, I mean, for us as a validator, it's been very challenging but very interesting, right, to like really understand how to optimize this and how to generate higher rewards. Now you guys have done this like enshrined liquidity. How have you thought about designing this? And maybe also in reference to the Chain model, like where did you want to differ here in terms of how it works?
Yeah, I think the justification here is, chains are interesting because of their apps. That's why users come and use them. So what can we do to ensure and help apps win? And what else does an ecosystem need, right? Where should inflation really be going in a network? And it's not to staking. Why is that? Well, if you're staking inflation and your security budget is the vast majority of your inflation and like one of the highest rewarding things to do, you're directly cannibalizing your own ecosystem. If I'm getting, 10-20% to stake tokens with the L1, which is probably like the most secure and safe thing I can do with my tokens, and a lending market is paying 6%, I'm never going to go lend my tokens there because I'm just going to stake them. And so I think using that security budget and inflation in a way that actually adds value is hugely advantageous and probably the way that most new chains are going to move towards in the future. You can get to a level of security that is safe enough by using tokens that would otherwise not be able to be used. So, for example, in our case, we allow investors to stake their tokens for around the base inflation rate, which is around 2 to 3% APY, so relatively low. The rewards are locked and vested over the same 4-year vesting schedule, so you know you're not going to be cheated on. And now we have built up a layer of security and economic stake that is enough that we need. So instead of using 40% of the supply to pay to these stakers, let's use it to do something meaningful. And we basically do two things. One is enshrined liquidity and the other is VIP. So enshrined liquidity is built basically just to incentivize the Initia L1 to be a liquidity hub for all of the rollups on Initia. One of the interesting things about Initia is that no team is building a general purpose layer 2, right? We think that is like a losing fight. Every layer 2 on Ethereum is a general purpose layer 2, and the difference between them is the color of their apps or their branding. Really just not interesting. We want people to build app chains, focus on one thing, go try and win on that vertical. And because of that, you're probably not building a DEX on your chain, or you're probably not trying to build liquidity on your chain, or you don't want to do that. And so the initial layer 1 acts as the base hub of liquidity for everyone. And so we repurpose a lot of the inflation for 25% of the entire supply for staking basically LP tokens with validators. This allows us to just build a hub of liquidity for major assets. And because of how interwoven rollups work, it's all accessible from L2s. So right now it's just init USDC. We might add other pairs soon, probably init SUSDE from Athena. And then if there is enough demand for assets like ETH or BTC, we'll build for that as well, using the same inflation. Then the second part of inflation, another 25% of the supply, is basically to VIP. And this is allocated to users of layer 2 applications. As mentioned earlier, layer 2s get rewards based on how much in it they have, plus a gauge vote on the layer 1. And then on each of these layer 2s, the teams set metrics on chain on what users should be doing to receive these rewards. So if I'm Echelon, for example, I need to lend init and lend USDC. And for that reasons, those on-chain metrics count for my VIP scoring, and I'll get init rewards based on that. And these rewards aren't just distributed upfront. They're vested as escrowed init. And basically the way to unlock these rewards is by maintaining your engagement over time. So it's essentially a programmatic airdrop system where every 2 weeks users are being airdropped rewards, and they have to keep using these chains to unlock these rewards.
And is this a vested interest program that's happening on the L1 or is happening on the L2s?
So it's based on L2 activity, but you get these rewards on the L1 directly to a user. So, it can't be, a team can't just give it all to themselves and then take some of that. They can set an operator commission just like a validator. Yeah, I think the launch has been pretty cool. We have probably around these 10 rollups, around 30 to 40 million TVL, and all of that is natural. I think one of the things I've seen from a lot of chain launches this past cycle is TVL deals before launch, so that right when you launch the chain, you basically have a few hundred million or even billions of dollars of TVL. But this is an incredible waste of money, almost always, right? The vast majority of this TVL has no mandate, so it's just sitting on the chain. or it's in a form that is entirely useless, right? Like, not to throw EtherFi under the bus, amazing team. We have WETH on the Initia L1, but like a WETH ETH pair is probably not going to do much for advancing your economy on chain, but maybe a stable pair with a native token or, an ETH USDC pair might. And so a lot of the liquidity is basically just a way to show on DeFi Llama that you have larger numbers. And you pay for that in tokens that were usually at some sort of seed valuation rather than the currently trading price. And these tokens are kind of phantom tokens. Props to teams like Bearchain, which did this at least publicly. So everyone knew how much in rewards were being emitted for these pre-TVL farms. But there's other teams that essentially just promise investors locked tokens at a discount to bring TVL on the chain. And these tokens just will suddenly appear in the circulating supply because they actually came from something like the foundation. And I think that's a pretty unhealthy habit that the industry has gotten into. And I'm hoping that we can do things a bit more cleanly going forward with Initia.
Yeah, it's a big thing. You guys have done things the clean way at every turn. Like whether going out to community round at the same or like lower round actually than the last VC round, the way you've launched, the float, being transparent about it and stuff, launching at a lower valuation. I think all these things, you guys have done things the right way. Let's see if it pays off. Hope it pays off. I think like one thing we kind of spoke about this a lot leading up, and when we're advising teams on this is that like there's a reason everyone does things the wrong way, right? Or like the wrong way. Like there are a lot of benefits to launching at a higher valuation with a scammy float, like all the stuff that you see, I guess most egregiously in like the movement type situations. There are like benefits to doing that. And I hope that like I think Initia is probably the highest quality project that's done things the right way. There are a few others, but yeah, and I'm hoping it can like start a trend because yeah, it's cool to see.
Yeah, I mean, I think this is definitely sort of ties into, well, there's a little bit of a crisis in the industry, I would say, at this point, right? Where we have all of these new tokens launching and people trying to manipulate the price, the FTV, the TVL, and it works until it doesn't work. And then I think we have seen now that just retail. I think it worked in the past, right? Because it looks great, and then retail users would buy it, and it would kind of sort of sustain, and maybe you could sort of fake it till you make it type thing. But then I think users have woken up to that, right? And they're like, well, these things are like down only, and like I'm not gonna buy it, right? And so we see basically almost all the new launches struggling, right? And just going down and not being able to sustain it, and everyone worried about the unlocks that are coming. So I think different ways are needed. So it's very cool that you guys are going that direction.
Yeah, I think what matters is just how long do you expect to be working on this project and what is your time horizon? The incentives are just totally not set up for you to be a long-termist in crypto. Like, by no means possible, right? And I don't know, I just think that Initia can be huge. I love my team. I love the people that we're working with. And I hope to be working on this for years to come. And so if you have that mindset, I think starting somewhere reasonable and growing with your ecosystem and with the project only makes sense. But we'll see what happens. Yeah.
Yeah, I think like even the most long-term teams and that we work with on the venture side or even the consulting side of Delphi, like once you have a token live, because of the short attention span that the community and like a lot of people just within crypto has, there's just so much pressure. I think like we really loved how long-term you and Stan have been thinking about Initia and like just the amount of time you put into even the launch. Like I'm curious, 1 year after mainnet, like what's like a single stat that will tell you Initia's like working or not? Like what, like for you guys, like what are you guys thinking about long term? Obviously not, price or anything like that, but I'm curious what you think about.
Yeah, I think number of rollups is a great thing. But I think it's very easy to be. Number of rollups doesn't actually matter. What matters is probably more so like
There's a well-known
revenue.
ecosystem with over 100 rollups.
Yeah, exactly. I think all that really matters is a few applications. So rather, it should be metrics like revenue generated by rollups, right? Stuff like the fees that are actually generated. Are these teams making money? Like, how profitable are these rollups? Users that are cross-pollinating, that'll really show if, this interwoven thesis is working out, where you have all these app chains that users can move between very easily. And then probably TVL is just a standard metric to look at across the rollups. But I think the biggest one is really just revenue.
One question I have, it feels like Initia and the app chain thesis generally is like a bet on crypto innovation, right? That hasn't happened yet. Because I don't know if you agree with this, but to some extent, like if sort of Anatoly and some of the Solana people are right that the only use cases are minting and trading tokens, then I think Solana or something like it is probably the right design, right? Like a monolith with shared state, like all the DeFi applications share state and stuff, is probably the right design. So I think to believe in the Appchain thesis and in Initia, you sort of have to be bullish, long term, like crypto innovation. And I'm curious how you feel about that, and also the other two, like, how do you guys feel about that? Are you bullish at this point, and are like what applications, like pockets, are you most interested in, and especially for you on Initia, Zon?
Yeah, I think you're right. It really just depends on like how hard are people going to start tinkering. Are we going to start getting some interesting experiments? I've been thinking about it like when a new PlayStation comes out, you get some of the same games that you had before, but then a few years down the line, people start taking advantage of all the specs of the PS5 and you get the fucking most awesome games possible, like Elden Ring. And so I'm thinking that's, it's a similar bet here with the Appchain thesis, right? That now that it's actually easy to do this, teams will spend a bit more time and want to control their stack and will build something super interesting. The problem is what is going to be built, and the spectrum is so huge in the design space. And I think the Initia team itself has a range of ideas that we want to experiment with. But it's hard to say exactly what will be done. And what I think is also interesting is these new virtual machines that are opening up the design space too. Like Move has only been around for so long, but it is a phenomenal language to work with. But I think the viewpoint that new virtual machines will unlock net new applications is totally wrong. Because based on examples, we haven't seen any net new applications on Aptos or Sui. We just see the same things written in Move. And I think that's just about expressivity as a developer. And so I am bullish on experimentation, but I totally think that it takes time for those experiments to play out.
What about you guys? Curious.
Yeah, I mean, I do think there's strong evidence that DeFi or financial use cases is the thing that like blockchains are incredibly powerful for. And I think that's also where sort of the blockchain advantage really comes in, right? Because the composability in DeFi is just amazing, right? You can do something and then it leverages this protocol and then use a token in some other protocol and maybe borrow against it and do something again. So I think if you compare like the traditional financial system and the on-chain system, then I think that kind of composability and DeFi and innovation there does feel like really the unique superpower. Now, of course, I think what it does open up is now you can maybe financialize and incentivize like a much wider range of stuff than you can in the traditional world. Like you can start having maybe, social networks that have some kind of incentive component or games or Now, yeah, I mean, I think social networks to me has been one of the things where, even from the very beginning, I felt like if you look at something like Facebook, right? Facebook managed to get this enormous scale, but the users who, the power users who really like helped make it a success, they didn't benefit from the success. So I've always felt that like if you could build something like a social network type thing where you have much more of an incentive alignment and the people actually driving it forward can benefit, and you have sort of markets that actually work, that could be like extremely powerful. I don't think we've seen that yet, right? I mean, you had some brief spikes with like Friends Tech, but like it didn't really make sense. They weren't well designed. So I think that is one example where, as a category, I feel very bullish on in the longer term. Gaming, I don't know as much about, so but I could see that also being one. But yeah, what do you think, Anil?
Yeah, I think, obviously within Delphi, we talk about this question a lot. And I think like when it comes to app chains, we've, to your guys' point, I think we've really seen specifically not just DeFi, but like perp dexes kind of be like the biggest winners in this like app chain thesis, whether it's DYDX, Hyperliquid, etc. I think more broadly though, the way that I see crypto, I've said this a bunch, is just like humans like most powerful human coordination tool, right? And I think that actually becomes more and more useful with kind of like all this abundance that's created with things like AI going forward. So yeah, I'm still very bullish on a lot of these use cases that we have been investing over the years, even though, something like gaming, obviously we were, big investors and big proponents of like Axie and, Illuvium and stuff way back in the day. I do think games have like this big potential of being this like, every, I think, year in crypto, you always, are hoping for, 1, 2, or 3 like big mainstream applications that kind of like not just show off the power of this technology, but also onboard a lot of the masses that maybe aren't in crypto yet. And I think games are still like a bet that our team it's very hard to make that bet because I think a lot of them won't work out, right? But I think we've invested in a lot of like really strong teams that think about this in like the right way, and we're all obviously hopeful that like one of those works out. I think when it comes to like, DeFi and its place in crypto, like I think I go back and forth on this, honestly. I think like when I first got into crypto, I was super excited about DeFi for sure, but I still thought that like there was this huge potential for, a majority of like long tail use cases. And DeFi would not be like the biggest portion of this. And I think over time, I've kind of come to realize that DeFi is kind of like the backbone of all these other use cases anyway. And what percent is that? Is that like 50, 60% of what crypto will actually like enable? Is it like 80, 90%? Is a thing I kind of go back and forth on. And I think like is like the question of like, us doing research, us building, us investing, to, figure that out.
I think the next big boom for applications will be once zk-TLS is like here and ready, right? That's, you can just bring anything from anywhere on chain and create primitives for it. And that just widens the scope of what we can bring on chain by like, trillions, right? Right now, it's actually still pretty hard to bring new assets on chain, whether those are like RWAs that no one cares about, like a wine bottle. But once you have like the ability to bring someone's gaming data on chain, or like their scores and stuff, or their medical records, these are all things that zk-TLS just like enables a lot quicker. And I think that's when you have the next boom of crypto, and I'm pretty excited for that.
So just zk-TLS basically means, right, like you have some sort of web session, and then you can verify the results from that, write it back on chain. So let's say if the medical record thing, I log into my, I don't know, medical website, and then you can verify some data that it shows there, leveraging SSL, right? And then you can verify it on chain.
Yep. So I think like, ideas like medical records on chain have been always one of the things that people have said blockchain is great for. And theoretically, it makes sense. We've just never gotten that, which is kind of crazy, right? Like no one has done it well yet. And so maybe zk-TLS will make that easier. But, I'm just looking for more fun things to do on chain. And I think, like allowing people to bring their, World of Warcraft or their League data on chain and start trading stuff, or the ways that we can start to stack financial primitives here. Maybe I'm lending against some of my skins, or who knows what can be created. But the design space just becomes so much bigger.
My kind of take, although is that basically crypto is in the trough of disillusionment stage, and like I don't know, I've been speaking to a lot of teams recently that have sort of like been building for a few years and are now seeing like big upticks in, and this is everywhere from like sort of WorldCoin to like stuff in the energy space, like the decentralizing grid stuff that we've talked about for years. Like all these things have been building in the background for like sometimes 7-8 years and are really starting to see like upticks. And I think eventually almost all the things that people imagined in 2017 will end up happening. It'll just take much longer than everyone expected. Kind of like how it happened with the internet, right? Like all the most ridiculous, like laughed at ideas that people had in the late 90s ended up happening. They just happened like way later. Um, so yeah, I don't know. I think the same thing is gonna probably end up happening in crypto. It's just tough because at the same time, there's a lot of very overvalued like vaporware, because of just the nature of public market, like giving public market liquidity to early stage things. Um, and so you have like these like two forces happening at the same time. Um, yeah, but I'm pretty bullish on a lot of these different applications like coming to market, and I do think it's kind of a no brainer to me that like pretty much every asset will end up on chain. Like you're already seeing it, and like stablecoins. Anyone who's ever owned a stablecoin for a sufficient amount of time just knows it's like you'd rather have that than a fiat dollar in a bank account. It's just better in every way, right? You don't have like a bank like cucking you every time you want to make a transaction or asking you to go into branch. Like, yeah, it's seamless like interoperability with anything you want to do with it. So I just think that's going to be the case for like every asset. And you're seeing it with stocks. I think Superstate just announced today they're like bringing stocks on chain. We know a few people working on that too. Yeah, I'm pretty like yeah, I'm pretty sure on that one, and that's just like the DeFi use case. Like I sort of think there's no way to put the cat back in the cat back in the bottle. Doesn't sound right. Genie back in the bottle. Yeah, don't know why you'd put a cat in a bottle really. Um, yeah, I think it's gonna happen.
I think this goes back to like what we were saying earlier about like patience. Like I think the crypto industry has this kind of like mental illness of just like wanting everything to be done like ASAP and now. And I think like one thing I always think about is taking a step back and thinking about how far we've come. Even since like when we've gotten into crypto, I think, a lot of like the successes and headlines that you're seeing week by week right now or would be things that like you'd be in disbelief in that we would even have the opportunity to see even like 6, 7, 8 years ago. So yeah, I think like to your point and to Zahn's point, as you bring all these assets on chain, I think another cool part is like all this, experimentation, all these maybe dumb games that people view as like not value productive at all have actually been, making the infra more robust, have made like a lot of these mechanisms and the design decisions like way clearer. So when these assets do get on chain, we're not starting from zero and have to go and work through all those things while we bring these assets on chain. So yeah, I mean, I'm super excited about that. I think like one thing I've learned building Delphi at large is just that like you just got to be patient. This stuff doesn't happen overnight. But if you take a step back, like progress is being made.
I wanted to ask about one thing that maybe goes a little bit more technical regarding Initia. So if you think of the app chain, I mean, one of the big struggles with if you look at Cosmos, but if you look at app chains more generally, has been the fragmentation of user experience and the challenge with liquidity as well, right? So you'd have basically the nice thing in Solana or Ethereum, right? You have all of this liquidity, everything is there. Now you have different chains, it gets fragmented out. You guys are addressing that, but like how exactly are you guys solving that problem?
So assets are all issued on the initial layer 1, or the vast majority of them. And then to and from rollups, there's essentially 2 ways to bridge, but to simplify things, let's just say they all use IBC. And so if you have USDC on one rollup and you want to send it to another rollup, those tokens transfer through the layer 1. Because IBC has pairwise dependencies, if I went from rollup A to rollup B directly, I'd get USDC1. And if I went through the layer 1 from rollup A to initial layer 1 to rollup B, I'd get USDC2. And so what we do is we essentially route all transfers through the initial layer 1 and access this hub, because that's where all the liquidity is. And because of that, you can have fungibility of these assets, where if I'm sending USDC from one rollup to another, I'm going to get the same version, and we're not going to get any new token standards. Essentially, that's just the key way that we avoid liquidity fragmentation. Cosmos was created as this kind of a web design, but really it should have been more of a hub and spoke. And so we just said, let's hub and spoke this thing.
That was kind of like the original, actually even design and idea around the Cosmos Hub, was that you would have this kind of hub and spoke IBC routing thing. And then I think it was just a sort of, to some extent, it was a failure of execution, right? That didn't happen, and that you ended up having more of these like pairwise IBC thing, and then that didn't end up working.
Everything was a bit too permissionless.
Yeah.
You got to start off a little bit permissioned. Bring the thing into the world the way you want it to be brought in, grow it a bit, and then you can start to give it the reins. It's like having a child.
So it's kind of where Ethereum probably is maybe trying to go towards as well, in their very slow, methodical, researchy way.
Yeah. The nice thing is you have everyone using the same standard, right? Whether that's to get into Initia, you use layer 0, and then around Initia, you use IBC. All the standards are the same. And that means we're going to have consistency of assets, but we're also going to have consistency when it comes to trust assumptions. So as an asset issuer, if you trust one rollup, you're going to be able to trust the other rollup in the same way. You're not going to have to look into the details and see like, how is this rollup run? What's its sequencer setup? Do I trust this bridging or not? Because they're all going to be the same. And those are going to be enshrined at the L1 level. And once you have this consistency of shared standards, we can start to build a lot of better UX experiences over all of this. I think the UX that we have right now is not bad, but there's definitely a lot of work to be done. We're currently going to do a full redesign of the Initia app. The Initia bridge page is going through a change. We're going to change a bit of the way that you connect to wallets. It's already nice that you can use EVM wallets on any virtual machine chain. I think that's just the biggest blocker for getting anyone into Cosmos is they have to download a Cosmos wallet. So I'm never going to switch from my Rabby wallet, and so I need to ensure that would work on Initia as well. And so slowly we'll make this user experience better. We have the assets all nice and unfragmented, and the economy is just getting started, and I'm excited for where it goes.
So maybe final topic. With Delphi, you guys are investors in Initia right now. You guys run the validator Initia. You invested in a bunch of Initia projects. I think you guys have done some research reports, right, on Initia. So a lot of involvement already. I don't know, is there anything on the lab side you guys are also doing with Initia?
Not right now. Probably a bit early for that. We could maybe do something in the future. But yeah, not right now on the lab side. But yeah, as you said, pretty active on the ventures and research side.
Yeah, so people should definitely check out that research report. I think if people want to go deep on Initia, then that's probably the best place to go.
Yeah, I think we'll make it public actually for this pod. So we'll drop it in the show notes and everything like that.
Cool. So Zon, maybe to end off, what does the roadmap look like? So if you think of like the next 2 years, What are the most
I
important?
can tell you the next 2 years, but I can probably tell you the next 6 months at least.
Okay, let's do next 6 months.
Next 6 months is getting more rollups that we are already working with live and out to mainnet, adding more assets to enshrined liquidity, revamping the Initia app, bridge, and wallet widget to have a better UX, and then probably tweaking Initia VIP. So VIP is great in the way it is right now, but it only allocates rewards based on the gauge vote and the balance pool. And I think more interesting ways to allocate these rewards will show up over time. And so we want to make sure that we're consistently evaluating and adjusting our economic models. I think people usually don't change the parameters of their chain after it's live, but these are totally things that you should tweak. It's basically like changing, the Fed rates, whether you want savings or people spending. And so we're going to continue to adjust these things. And that's probably what the next 6 months looks like.
Awesome. And then what about, devs and users? Like, what actions should they be taking? If devs want to build on Initia, like, what's the process of that? And then, if users want to get set up and everything like that, what's the process for that?
If you are a user looking to get in, go to initia.xyz/onboarding. There's a whole flow there for connecting your wallet, bridging in funds, seeing what apps you can play with, and just getting in there. If you are a developer, docs.initia.xyz, that's your place to go. Or my DMs if you want to yap. You can hit me up at It's Always Zani on Telegram or Twitter. If you have an interesting idea, always love to chat.
Cool. Well, thanks so much, Sam, for coming on, and thanks so much, Anil and Jose, for doing this episode together. It was really fun, and I'm super excited how this Initia is going to play out, and what's the impact going to be for sort of the larger way of how people build in crypto.
Definitely. Yeah, I appreciate you guys. It was nice to be on.
Yeah. Thanks very much.
Thank you, amigos.